Good day and welcome to Markets Today. I'm your host, Bithe Mwema. Today being the second week of trading on the NSE, there is a lot of excitement on the bourse. We have seen a material announcement by Scan Group that has caused a lot of excitement on the stock exchange. I will give you a brief overview of that as we continue in the show. In terms of our guest in studio, we are joined by Churchill Ogutu. Churchill is a senior macroeconomist at Genghis Capital. We'll be discussing their cross-asset market strategy as well as what to expect given that the restrictions that are affiliated to COVID have now been lifted. Now back to the highlights. Yesterday, we did see President Uhuru Kenyatta give a national address, and he did actually lift some of the restrictions affiliated to COVID, removing the cross-county movement restrictions that had been there for the last 90 days. You can move in and out of the counties that you were not previously able to, and that's expected to see a rush of person-to-person movement from one county to another. What the president has done with this decision is effectively move the responsibility of COVID from a national level to an individual level. It's up to you to sanitize, keep your social distance, put on your mask so that you can avoid getting COVID as you go up and about your normal day-to-day business interactions. That said, the curfew from 9 p.m. to 4 a.m. still stands, but possibly this could be ended in another 30 days or so. In terms of social gatherings, you're still not allowed to go into the restaurants and sit in, but you can do your takeaway. 15 people is still the maximum number that can attend weddings and funerals. The kicker in all of this is that 100 people now can be caught in a religious setting, whether a church or a mosque or any other religious setting. They need to observe social distancing and can be there for at most 1 hour. So that's some interesting news that we're seeing there, and we expect to see a bit of social momentum and a slight spike in business activity as people get around and begin to trade on the excitement of the fact that they can go back. But is this enough to actually sustain an economic turnaround? Is it enough to actually sustain a rally on the NSE? Is it enough to sustain a rally across the different asset classes? That's a question that we will be answering in a few minutes. In terms of the NSE, we have seen Scan Group yesterday come into the market and announce a special dividend of 8 shillings per share. This they are paying after the exit of one of their businesses, which is Millward Brown. At the time of announcement of this special dividend, which was yesterday on Monday, the dividend yield was 46%, a rather healthy return for any stock in this economy and in this crisis. However, today we have seen a material spike on the share price, largely owing to the material announcement of the special dividend, and we have seen this price hit a high of about 29 shillings. This has reduced the dividend yield to about 26%, which is still a healthy dividend yield, even though you factor in your cost of trading, which would be about 6% in and out of this particular stock. That said, we continue to see more demand as opposed to supply at this current price of about 29, and we will continue to see, I think, a continued price hike as investors try and see if they can lock in that 8 shilling special dividend, whose record date is later on in the month of July. Now, moving on to the NSE outside of Scan Group, are there any other picks that you should look out for? We discussed this with Churchill on the cross-asset strategy that was published earlier on by Genghis Capital. Welcome to the show, Churchill.
Thank you, Bidhe, for inviting me to the show.
All right, a lot of exciting news happening. What's your view of what the president had said, what Scan Group has done, and what's happening on the NSE today?
To be honest, I was quite, the president's announcement caught me quite flat-footed. I didn't expect it. I was just looking at the numbers of the COVID confirmed cases lately. It's been above 300 for the better part of this month. And I was looking at the 7-day daily confirmed cases as at the end of June. That was around 202 cases. End of May, that was around 162 cases. So you're saying that there's an upward trajectory. So I was more biased towards that, perhaps that we could have more or less status quo remaining. The kind of movements between the counties, Nairobi metropolitan area and the coastal counties, because these are the hotspots, and just even looking at the fact that some of the countries which had already opened up in the US, case in point in the US, whereby initially the East Coast, New York, New Jersey states were the hotspots, but right now we are seeing the hotspot has moved to the southern states, the western coast sides, California, Georgia. So I expected that perhaps that could influence some restraint on opening up the economy, but that hasn't been the case. So I was a bit it was a bit unexpected move,
Okay.
in my view. But that said, I'm seeing that there could be a bit of some activity, in particular movement of people. We can say that even in the period where the containment measures were, movement of cargo still continued. People could send cargo between the outside those counties that had these containment measures put in place. But right now what you're seeing mostly is now the movement of people. Perhaps anecdotal evidence coming out is that people are now going up country. Perhaps people who have lost their jobs in urban centers, now they might now go look opportunities in the rural areas, things like that. But that's still at the initial stages. Of course, that there's a bit of some excitement now. At least there's some free movement of people.
Okay.
Getting into the NSC, of course, the biggest news lately is now the Scan Group announcement. Even coming from what we are speaking about in the cross-asset strategy, in our last week's, actually this week's issue, we are looking about the dearth in terms of income investors. We saw late May or early June, Equity withdrawing its dividend recommendations, and right now, I think by and large that's where we are seeing trajectory of the announcements going towards that direction because of capital preservation. Companies which have excess or profits, they are not able to expand their businesses. They prefer, rather than distributing to shareholders, they just take it around. So there's that broad-based, what you're thinking, broad-based withdrawal or retention of their capital rather than sending it to shareholders. So the news from Scan Group was a plus. A 46% dividend yield as at the end of yesterday. That was a crazy move, and it was expected that today we'll see some uptick in price, and that has been the case, touching close of 29 shillings per share. So I mean, that's expected. I still see that the people who came into this share earlier on are making money, are already in the money. Perhaps they may sell, they may not even wait for the dividend to be paid, so they might sell at this current such that they can realize the price appreciation.
And actually, when this announcement was made, I think the share was trading at about 17 shillings.
Yeah, it was 17 shillings.
So at 30 now, really, you've already made 13 shillings. There's no need of waiting for an 8 shilling dividend.
That's around 70% return.
Yes, already. So sell at 30, let the next person wait for an 8 shilling return.
Exactly.
Wow.
Yeah.
How could we have seen this coming? I missed it. I know there were many announcements in terms of Millward Brown, etc. There was a lot of, I think about the last 2-3 weeks, there has been a continuous mode of communication from the company. I honestly just did not pay attention.
People didn't really pay attention, even as late as last week.
Yes.
There was that announcement from NSA that there's a material announcement based on Scan Group around this sale, but I don't think we picked it up.
Yes.
We could have picked it up in the cross-asset strategy.
Yes.
But now we are focused on the other announcement that was coming up. There was the share back plan, the draft by NSA. That's one of the things that we captured in our weekly strategy.
Okay.
The prior week, we also captured Kenya Airways, the one about government takeover plans. So there's a bit of corporate restructuring or corporate activities that are happening in the market.
Okay. And just if we go back to the buyback, I know that particularly affects companies such as Centum. They've been very vocal about a possible share back. What could that mean if this now becomes a law? They've been quite vocal about it, Centum in particularly. A few years, 10 years ago, 9 years ago, Safaricom at some point had mooted share buyback. At that point, remember that it was listed in 2008 and then it went on a nosedive. So there was that plan at least to boost the share price
of Safaricom there, but at least now, because of the uptick in price, that's been a back burner. So that's also in terms of Centum. We remember might have been last year when major shareholder of Centum came up and saying that he wants to buy back some of the shares. So there's a bit of some activity around it, excitement around it thereabout. So with the draft CMA plan to have share bucks in place, we could say now it could be a plus for the counter. Now it's trading at 0.4 times its book value. So perhaps it's a way for it now to...
That's a huge discount.
Yes, it's a huge discount here.
Okay.
Yeah.
Okay, fair enough. So now you can walk us through your cross-asset strategy. So what are you telling investors to do this week outside of the highlights that we have discussed?
We're looking at Safaricom. We've been seeing it from its lows of 23 shillings end of March. We've seen it right now at around 30 shillings per share, and we see that around 30 shillings per share is a bit of a resistance levels. So what we've seen in the last 2 weeks, there's a bit of profit taking, in particularly by foreigners. We've been seeing last week net outflows in Safaricom accounted to around 42% of the activities by foreigners. So that's quite significant that right now I think that there's a ceiling on 30 shillings per share. So that's one of the key calls that came out from our report, that perhaps at these levels, and it closed around 29 shillings and 65 cents.
Okay.
As at the end of last week, perhaps investors can look at profit taking at around these levels.
So sell at 29, 30 shilling per level.
Okay.
And is there any correlation with the new announcements that we have seen? There's a new acting chief finance officer, Ilana Darcy. She was the head of investor relations. So what is that? Is that material news? Does it have any impact on the outlook of the company?
So we had muted impact following the announcement that came out last week on at least the interim CFO. We'll be looking forward to the analyst call that will be around 2 weeks time to just get some further insights. We know that the book closure of Safaricom is end of this month, 29th of July, 1 shillings 40 cents per share. I think that pretty much has been priced in by the time it was announced, so it's already been priced in the market. So people will be looking at, in particularly, all these activities around Safaricom. What's the direction, what's the strategy? So that's what analysts will be keenly looking at.
Okay. I don't know, I'm still stuck on the 70% return on Sky Group, and I keep imagining if you'd have put in $1 million now, you'd be at 1.7. So let me get out of that bandwagon. I missed it, and that's the end. But I know you do a weekly cross-asset strategy. Is this something that individuals should pick up? Should people pay more attention to things that are happening on the NSC? How do you actually spot opportunities?
How we look at it, in particular with our cross-asset strategy, is something now we're trying to implement in the market, whereby if you look at your portfolio, you don't look at your portfolio as equities only. You look at it as a broad-based, you have your equities, you have your bonds, and we have other perhaps global markets. And you're trying to now to demystify that, rather than looking at it as it is just my equities portfolio. You just look at it broad-based. Okay, if there's no opportunities in equities, I can look at bonds, and vice versa.
So do you have a current portfolio or a dummy portfolio that you follow and apply the strategies that you're telling the market to do?
What now, we don't have a unified broad-based portfolio. We know that the traditional is 60-40, 60 equities, 40 bonds, but we don't have something similar to that unified. But we usually have different fixed income portfolio. We have also our equities portfolio. But what we're trying to tell the market is, based on activities, perhaps with this announcement by the president, what does it mean? Perhaps people are looking forward. Will it lead to a reversal in all these negative announcements that has come from the equity side? For example, what you just said earlier on about issues to do with dividends, income stocks, which we don't think that with the current uncertainty with COVID that they'll continue pay robust dividends going forward. So it's an opportunity for you. If you are missing out on the dividends on equities, you can also get income on the fixed income front. T-bonds, you can either get into infrastructure bonds, which are tax exempt. You can look at the short end, but though the withholding tax on that is around 15%. Anything below 10 years maturities or anything above 10 years maturity, that's a 10% withholding tax.
Okay.
But primarily because of the uncertainty, what you've been telling people, even if they're looking at the fixed income side, they rather look at the short end of the yield curve. Things to do with 5 years maturities and below,
all right,
rather than stretching your duration longer. Yeah.
So which particular paper are you telling people to buy, and is this in the market currently?
We are looking at 19 FXD1, the first 5-year paper that was issued last year. We're looking at levels between 10% to 10.5%.
Is it reopening, or you're going to buy in the market?
It's going to buy in the market, yeah. But that has been now surpassed by events that came out yesterday. There's now the July primary bond issue. There's a 5-year bond, the 5-year paper which was issued this year. There's a 10-year paper, and then there's a 15-year paper. So broadly, the CBK is targeting to get 60 billion shillings out of the market here. But primarily what we are seeing that most of the investors will bid at the 5-year space rather than the 10-year and 15-year space. Why? Because of the high liquidity in the market. Our market has been quite liquid. We've been seeing interbanks has been coming down.
Yes, it has.
We've been seeing each and every day CBK has been coming to mop up liquidity, and they've been getting massive bids. So we have been seeing that the market is quite saturated with liquidity. So that will influence even the short term paper, the 5-year paper that has been reopened in this month's
first
primary
issuance.
bond issue. Yeah.
So primary bond means that you can actually go and buy it directly from the Central Bank of Kenya.
Yes.
So what rates are we looking at for the 5, for the 10, for the 15? What guidance, or how are you looking at it?
Right now, we haven't put our bets yet. It's closing by 21st of July. The auction is on the 22nd of July. By next week, we'll get a clear direction where the rates will come. But I'm seeing that there'll be a bit of undercutting in primarily at the 5-year paper. You saw the bids that came out, the June primary bond papers.
Yes.
There was a 5-year and then there was a 10-year paper. The bids came to around, it was massively subscribed, but in particularly at the 5-year end. So there's a bit of undercutting. People have high liquidity. They want to deploy their cash somewhere they can get some returns. They'd rather give the government
than give to the economy.
Exactly.
So what do you remember what the 5 and 10 year closed, or sort of range bound?
It was actually below our indicative rates. I remember we put around 11.5 to 11.6, and at the 5-year paper, it came actually below than that, and that was something that by the time we are approaching the auction and just looking at the liquidity levels, we are more convinced that perhaps our recommended bids were elevated. So we are seeing a bit of some undercutting.
So there's just downward pressure from closer to the 10.5 sort of range there.
Exactly.
All right. So that's we have the 5-year, we have the 10-year, we have the 15-year, and you've given us a sense of what's happening over the next 2 weeks. So now, if somebody's looking at equities and also looking at fixed income, and you've also said global stocks. What should somebody consider at this point in time? Outside of Scan Group, is there anything else that's really glaring outside of, you've said sell Safaricom at 30 shillings, take profit there. Clearly at Scan Group, if you're a holder, at some point it doesn't make sense, at some point it doesn't make sense. Are there other opportunities? I know I've seen people ask about cement. There's increased consumption of cement, but when I go to the streets, there's no consumption of Bamburi cement in particular. It's more Savannah and Simba, and yet the price is off. Are there other opportunities that sort of just glare at you when you're looking at your screens, when you're following the market, when you're speaking to investors?
Of course, apart from the big names, Safaricom, you have the KCB, the equity, where investors can ride on the liquidity in the market. Others are out of consensus trades that we keep on looking at it on a weekly basis here. This week we are looking at now the Centum, perhaps based on the share buyback. So there could be some activity around it. And
as a buy or as a sell?
As a buy into it, just based on the discount, to book. And we don't know what how this share buyback will pan out.
Okay.
But ultimately, we are saying that it will be for the good for the people who ultimately will buy back their shares,
Okay.
to buy it at least at healthy levels. So that's an opportunity that investors can look at the moment. Though these are out of consensus trades,
Yes,
we've been
okay.
quite looking at them. Last week we recommended KQ, but that one of course is out of the market at the moment, just based by suspension. But I remember even last week it rallied 40% just
Wow.
prior to that announcement.
Yes.
And we are seeing that people are looking at government is coming to buy out, and then it was on the back of the report by one of the transport committee members that to the tune of 800 million shillings had been allocated to buy out the minority shareholders. So it worked backward, and then it came to around 4 shillings and 88 cents as the acquisition price. By that time it was trading below 2 shillings, but you saw it rally to around 2 shillings 61 cents. So that was a plus even to some of the investors who came in. So right now, of course, the big names, those ones are there, and just looking at some opportunities, but now those are far and wide in terms of people who are still paying out the dividends. We have Centum had announced its dividend payout. Book closure is still to be advised. We have now Safaricom end of this month. Some of the other
Scan Group as well. End of the month.
Of course, yeah, Scan
Yes,
Group,
end of the
yeah,
month
that
as
one. Well, how did they forget about
I
it?
know.
Yeah.
Okay, all right.
Yes. Yeah.
Okay, so it looks like the strategy now is really more on a technical basis as opposed to a fundamental basis, because you're trying to see where's demand coming from, and is there a big bucket of demand, unmet demand, that could possibly affect the share price of anything particular. Because I like what you've said on Kenya Airways, based on what the transport committee was saying, you'd actually identified a possible buyer at about, I think, 4.8 shillings?
Yeah, 4.8
shillings.
Yeah.
Then now we've seen Scan Group, then Sent Up, the possible upside there is again based on Centum being a big buyer of its particular stock.
Sure, yeah.
Is there any other stock that we could possibly see a big buyer? And I like the way that you're looking at it and saying, okay, fine, foreign demand is flattening, but then who are other possible buyers who could come into the market?
At the moment now, it's a bit, the outlook is quite uncertain whether a buyer can come in at the moment. Some of these transactions that are happening are things that had already been preempted even prior to COVID. Even this sale by Scan Group is something that was in the pipeline. KQ has been in and out over the years. So it's only that now they're materializing under COVID, yeah. So it's a bit hazy at the moment to see whether somebody will come out to buy any of the other stocks. To be honest, yeah, I don't think we've followed it as such. So it's now back to individual stocks, yeah. And investors' preference. Are they getting into long term? Now this is the time to come in. Price multiples are quite low. They have really come off the last 3 months. It's attractive to them if you're looking at the long haul. If you're a person short term, now this is what you're looking at. This is what you're looking at. Yeah.
Okay. And then you did also mention that your cross-asset strategy looks at global stocks.
Yes, we partnered with Aegean Securities. That was last month. So what we're trying to incorporate, even people can get into the FX trading now, which is offered by Aegean, our clients. So even in our cross-asset strategy, we also give our views in terms of where the global market has been happening, what has been happening in the global front. You know how it is, and currently there's a bit of some people are looking at even the global markets. It could be as a guide to how the Kenyan markets are will react based on this COVID-19. And we're seeing a bit of central banks aggressive monetary easing policies in the developed markets are influencing even how the currencies are performing, and even commodities, the demand and supply dynamics under COVID-19. So there are some opportunities to be taken by people who are looking at the global markets. I remember when mid-April, when oil tanked, at some point the futures were negative. So this is something that even some of the investors, had they shorted the oil market, they could have made some decent returns. So it's an avenue of even diversifying their portfolio. Well, they have their equities, they have their fixed income, but what else can they also supplement in terms of their portfolio? So that's where the global markets is coming in.
Okay.
Yeah.
So now that there's so much information, I feel like I could keep you here for hours on end. But if I'm an investor, possibly I'm interested in the different asset classes that you're talking about, how do I engage with you? How do I get to know what's happening in the markets?
Well, this is outside the report.
No, but even people who want to engage with Genghis Capital, I mean, how do they get access to do you provide research for your clients?
Yes.
How do people join your community, so to speak?
Yes, the easiest way to join our community is now to either get Jikuze app, whereby the retail investors can be able to, at the click of the buttons, they can now be able to trade and make trade, buy, sell. They can also read our research based on that app. And over and above that, we also give our details. We are active on social media, be it LinkedIn, be it Twitter, be it Facebook. So those are the other opportunities that we can be able to, as access points for investors, any potential investors now with us. And on the social media, is it Jikuze or is it Genghis Capital? It's Genghis Capital. It's Genghis Capital. Jikuze is now the platform for trading. Okay. Yes. All right. I think maybe we need to end. I think our time is more or less done. Do you have any parting shots as we come to the close of our show today? Opportunities are still there in the market. I know it's still there's so much uncertainty coming up, and even with the back of the exciting news that came out from the president yesterday, now how does that information filter through to the stocks? So it's still uncertain. We don't expect that now people will start go to banks and start borrowing or to expand their businesses. There's still some uncertainties around it. Yeah. There are so many moving parts that is happening in the macro space, but still there are opportunities to be encountered for investors, in particularly for the long-term investors. Okay, thank you so much for your time. That was a very interesting conversation with Churchill Ogutu, who is a senior macroeconomist at Genghis Capital. We've discussed so many trade ideas, and some of the key things are scan group, but over a certain price level, I think at 30, it does still give you a 26% dividend yield, which is still a relatively healthy dividend yield. It's actually, I think, almost double what we are seeing from the banking sector. I think the best we've seen is 10-11%. Yes. So there's still some upside there for you. Their house is also saying to sell out of Safaricom at 30, take profit at that level. There are also a couple of opportunities in the fixed income space. There's a 5-year, a 10-year, and a 15-year that are out in the primary market, which will be closing on the 21st of July. There are also opportunities in the global equity space. I think the key call here is there are opportunities in the midst of uncertainty, and you can be able to get access to this information either through their app, which is the Jikuze app, or you can be able to go to their social media websites, that is Genghis Capital. That's all we have for you today. We would like to know, was this worth your while, and what else would you want to know? Our SMS line is 20146. Our social media platform is Metropole TV Kenya. That's on either Instagram, Twitter, or Facebook, or you could reach out to me directly. That's Mbithe Mwema on either of the social platforms. Thank you so much for your time. See you next time. Good day.